Hey everyone, and welcome to the Bricks, Bucks, and Bytes podcast, your weekly dive into funding, market, and investor news in architecture, engineering, construction, and supply chain. Before we get started though, if you're a startup founder or operator responsible for innovation in your company, or you want a deeper, more insightful look into technology in AEC, you won't want to miss our newsletter. From deep dives into particular technologies such as AI, robotics, design, software, and so on. Hot takes from investors betting big in AEC technology and advice on building tech companies, including the stories and takeaways of the most successful AEC technology founders. Head over to www.bricks-bytes.com and sign up today to get this exclusive material straight to your inbox. And now for the episode.
Okay, good morning, guys. How are you all this morning? Anything exciting happen in your weeks?
Hard work. I'm on with YouTube. That's pretty great. Yeah, other than that, all cool. All good.
I'm glad you all had such a great week by the sounds of it.
Should I reciprocate and ask you, how are you, Owen?
No. Let's move on.
Okay.
Inflamed, yes.
Inflamed.
not feeling on top of the world. So I apologize for my voice in advance, but here we are.
Never been much recording this week, clearly.
The irony is, I don't think we usually record our podcast on Friday. So we do this in the morning with you, and then we usually have 2, sometimes 3 in the afternoon.
Oh, wow.
So, no recording this week.
We just checked, and the funny thing, in the 1st of November in the calendar, we have 8 hours of recording.
It was a bit crazy, yeah. I don't know how that happened.
Yeah.
But the thing is, when you get like a really good guest, you'll find that their availability is very scarce, and sometimes you just have to say yes to make the calendars match, right? So,
sure.
We have a few of those coming up, and it's good to just get it done.
I also listened to the episode with Omar Hanspal yesterday. I thought that was a really good one too.
Mm-hmm. Yeah, brilliant.
Yeah, interesting format of actually going through the presentation and we asking questions, he explaining. I really enjoyed that one.
Yeah. Thanks. He'll be coming back. I also, Gabe on Bit Builders recorded an absolute epic episode with Lee Rosendahl from Think Orbital, who was another one of the SpaceX kind of OG crew.
Nice. Alongside Jim Cantrell, which he had already interviewed.
Yeah, I think Jim was slightly earlier, but Lee was brought in later on to help with various launches. I think he done something like he was involved with over 200 launches with SpaceX. So I've only listened to the first 20 minutes or so, but
that's what you call a veteran.
Absolutely. So very exciting. But anyway, so today we're going to discuss Building Radar, which is a very exciting company. We actually had Anthony, which we released on Wednesday. I feel like we're just talking about all the episodes we've released now, but that was an interesting one. So he's a chief product officer at Building Radar, and coincidentally, they also just this week announced, or last week perhaps, a release, an investment of fundraise, should I say, of 6.5 million euros, which is exciting news. And then we will talk about currently unpublished, but will be published about the same time this podcast goes out, Fundamentals Q3 update or report of the industry. And then we have a little investor's take about flying cars. Is that right?
Flying jets, electric jets. Yeah.
Maybe not flying along a lot longer anymore.
Okay. Martin, do you want to read in your succulent Polish accent the headline?
Okay. Okay, so I'll start with German. Munich-based building radar NAPS.
Munich in German is München.
München-based building radar NAPS 6.5 million to expand suite of sales enablement software for the construction industry. And so Building Radar, next generation software platform that automates workflow in construction industry sales, announced 6.5 million investment by social capital the funding will allow the company to continue AI-powered product development and expand its market. As it is Munich-based, I guess, Patrick, you came across them. Can you tell us a bit more what they do?
Absolutely. So Paul and Leo, the two founders that you see here on the picture, started building Radar originally as early as 2015. So the company has had its share of experience and going through its own journey, and no journey typically in building a generational company is completely linear, and neither was building Radars, but I think to a very, very positive trend. The company is building currently, as its latest iteration as a business, sales automation software for construction material suppliers, component suppliers, basically those that supply any kind of hardware or material into a construction project. What the software allows these materials suppliers to do is to find projects to bid on earlier than the traditional channels, networks, lead gen tools that they would use.
Is it a marketplace?
It's not a marketplace. No, it's really like a sales automation software that your sales department, your biz dev department, sometimes I guess it could also be a strategy department in some degree, but that would all be a secondary user.
Salesforce or of construction?
So exactly. So I'm coming to Salesforce in a second. So at the first feature is the lead gen. So it's much better at finding potential leads to bid on earlier than the traditional lead gen or other even like social channels that your company might have. And then secondly, it is sort of a CRM type software similar to Salesforce, but earlier. So Salesforce, the way the construction industry uses it in most places is that after a lead has been qualified, Salesforce is being used to then funnel the lead through the further process of bidding and winning, etc. But Salesforce is too clunky and too cumbersome for many parts of the construction industry to actually use it in the pre-qualification of the lead. So reaching out, getting on the phone, explaining the value proposition of your material supplier, sometimes doing demos, etc. So Salesforce is too clunky for many of these market participants to do that. And that's where Building Radar's second, value proposition sits, as they have built a very intuitive extension of Salesforce to the front end of the entire process. And they feed that funnel through their lead gen. I think it's a very good company. It's absolutely rock solid. And what I love the most about them is, one, the founders, and two, they have a very unique sales motion that is, in my opinion, hyper efficient. They are not a portfolio company of ours. I was trying my best to make that happen as part of this round, but they found a great lead in Soci Capital.
Yeah, from based on my discussion with Anthony, how I understand it to work from a user perspective, or perhaps so our audience would understand, when a contractor or someone tendering on a project receives like a set of documents, like a specification or something, usually within the specification, you have products that are specified, like lift, for example, it would be use Schindler lifts product XYZ. And at that point, once that product is specified, then the people tendering on the project have to use that product. And I guess these lift manufacturers know this, so that their process is to get in as early as possible. So they are specified and no one has the option. But what Builder and Radar enables is for the material suppliers to get in at that very early stage. So they're then specified by the design team as early as possible, so that when tender documentation goes out to be priced, they're already almost guaranteed to win the project at that point.
I cannot describe it any better. You nailed it.
How did they get this? Is there a platform that they get onto?
No, so they have. So I mean, we started talking about AI everywhere since 2022, right? But Building Radar started already in 2015, building relatively intelligent automation. Call it AI, call it not AI, but there was semantic interpretation, there was machine learning in there, and they built basically web crawlers that allow you to identify these projects earlier and in places that no one would look, and then aggregate it, feed it into a pipeline to their clients, right? So it's in the US, the listeners will be familiar with Dodge Report, for example. So Building Radar is basically a much more sophisticated and powerful version of a Dodge Report for the US market, which, by the way, Building Radar is also covering. So Building Radar is not only active in Europe, they have a bunch of business in the US already, and they are serving those clients there as well. So they are, in fact, the next level Dodge Report that way. And so today, Martin, we're hearing left and right, agentic AI. I'm building these agents that then actually, go through your workflows and then they talk to each other. So apart from the talking to each other part and handing over information of agentic AI, actually the crawling part and automating specific workflows, that was part of Building Radar very early on already.
Mm-hmm. The way they make money, is it through the commission on the material or introduction?
No. So it's a classic SaaS business. So they are charging, ARR for the licenses. And in my opinion, it's, one of the strong suits of this company is very healthy economics. And the customers get a great ROI, which is why they are happy to sign up for this. That's one of the nice things of being actually in these high ROI workflows like sales or procurement, is you can prove your ROI relatively easily, which Building Radar does to their clients.
Mm-hmm. They're also saying that they want to get into the UK, as the green belt is going to become a grey belt in the next few years. It's actually interesting. I've not heard that.
I've seen the term used on LinkedIn, but I didn't know what it meant until. So, what are we going down a hole here? But greenbelt is land that essentially you shouldn't or can't build on. And it sounds like they're going to twist the rules to allow people to build on greenbelt.
Which is suggesting a construction boom here.
Yeah. So what I understand from, whilst they're based in München, they also have offices in London as well. And you also mentioned, Patrick, that they operate in the US. Do we have any idea what the new capital will allow them to do, or how they, assuming they have product market fit already? I don't think that there was a series attached to this. It's just funding.
They don't call out the series here, so let me not do that. 6.5 million round, you can just do a little bit of deduction, is a healthy size for either a super large seed, which for a company that age probably is not what they would declare it, or for a very healthily sized Series A, not overpriced, not oversized, just about right size, probably. And so the way the article talks about it, I don't think they specify where they want to spend it or grow it. But I think it's fair to say that, deeper penetration of the markets that they are in will be on the roadmap.
Expand suite of sales. That's.
Oh, here we go. Here we go. It says,
Yeah.
I just have found it right here on the screen. It highly invests in the team's AI capabilities, accelerate our journey to becoming the go-to platform for teams in the construction industry, help grow revenue, win rates, margins across revenue channels.
Yeah, that's a very nondescript way of saying.
Once I started reading it, makes sense. How about
but deeper penetration of the markets that they're in? I would be surprised if it was about, let's open another 50 markets. So I think the markets that they are in are the biggest markets that they will be relevant for, and so deeper penetration there would be what I at least as a shareholder would expect.
Do we think that people could learn something from this? Because I think it's very interesting how they go to market with the whole getting in the door mega early. And they really identified how products get used on construction sites. So is there any go-to-market learnings that you guys can think of that might be able to be translated to other?
Sorry, now before I answer, you have to help me what Anthony actually revealed, because I only listened to the first third of his episode yesterday while on the bike, and I didn't finish the other 2/3. So what did he reveal about the go-to-market motion?
I honestly kind of remember if we got that far into the discussion.
Okay.
So tread carefully.
Yeah, then my spilling. No. Okay, look. So this is whenever let me do it more generically. Whenever you try to sell an enterprise sales product into large construction enterprises, it can be very tricky from a sales cycle perspective. It's very common to see. I mean, people would typically say, 6 months. No. It's very common actually among these companies to see 9, 12, or even 15 months sales cycles in order to get a 6-digit ARR deal closed. And one of the gripes that I have had for a long time is that when you sell tooling, which this essentially is, you're not selling the outcome, you're selling the tooling, and you're expecting then your customers to change processes, change behaviors, get new training, perhaps do some integrations with existing software. The generic VC playbook tells these companies, but if you do any custom stuff, you're never going to be scalable. Wrong advice. In construction, you're going to be scalable if you do the unscalable things that helps your clients actually onboard on your suite. And it is worth it because the LTV in construction enterprise is so much higher than it will be in many other non-construction related verticals. Products tend to be exceptionally sticky in construction. We can discuss why. I have very clear convictions why that is, but that's a fact. That's an observation. So the unscalable onboarding help, training help, bringing a customer into the basically activating them onto the product and doing certain, let's say, services around that once can still pay off due to the very long LTV. You will even get cash payments for that. So it can even recover your customer acquisition costs very, very easily. And so I don't want to give you the details now how Building Radar does it, but it's ingenious. And Building Radar has compressed their sales cycles and their customer acquisition costs to, when I looked at the numbers, I realized the true superpower of Building Radar is their sales motion. It's insanely efficient, but to a totally quirky and unintuitive way. So when, as a VC investor, a generic VC, you looked at the numbers just superficially, you would say, this doesn't work, this doesn't work, this doesn't work. But if you crunch it, which is what I did, you actually found out that it's one of the most capital efficient sales motions that I have ever seen in enterprise sales in construction tech. But you had to dedicate to crunching it. And that has to do with the fact that they are actually dedicating to servicing the enterprise sales customers in activation.
Is there a flywheel, Patrick?
Hey listeners, I want to take a quick break to remind you about the Bricks and Bytes newsletter. If you're interested in learning about the technology shaping the future of construction, you won't want to miss the valuable insights we share each week. To get this exclusive content delivered straight to your inbox, head over to www.bricks-bytes.com and sign up today. Link is in the show notes. Back to the show.
No, I wouldn't say there's a flywheel. I mean, flywheel defined as in one part of the by the way, perpetual flywheel does not exist physically. So physicists, don't write me an email now with hate emails. So, a flywheel defined in a business sense or a startup sense as in, hey, there's one component of the flywheel which gives more energy to another component, and that component then gives more energy back to the first component. No, in that sense, there's nothing like that here.
So what is the pain point actually that they are tackling for the corporate?
Finding business. And this is exactly why, 2015 to 2022, they were a bit unlucky in terms of timing because the industry had enough business. They were at capacity and that changed 2022.
Do you know what I also I find in the construction is that like products go in like trends. So what you'll find is that on projects, everyone starts using this tile made by I don't know, in London, everyone wants at the moment fired earth tiles, for example. And it just like, once you're in, all the designers, this is what they do. They go onto Pinterest, they go through the pictures, and it's like, fired earth tile, let's use them. And then the next one, Pinterest. And they all just copying each other. And so all like, it just goes in like flows. And then the next influential designer will start using another product, flooring by a certain manufacturer. And then you'll notice the next project you work on, they have flooring by the same manufacturer. And then the next project, they have flooring. And then it just goes. So maybe there's a little hack there. Maybe if you are trying to sell products in construction, just get onto Pinterest and just pump it.
I actually have a great company in the portfolio called Stylab that helps materials manufacturers exactly play that influencer game very, very well for these hyper specified materials, not what building radar helps with. So very optimistic about what you have been saying exactly.
Wanted to touch on the competition. Is there any competition on the market right now for them?
So established or / incumbent competition, yes. So in the US, we talked about Dodge Report. Germany has a similar directory of construction leads. France has a similar one. You would have to help me if UK has one, but I would assume
is a similar thing.
That's the one.
Thank
you. That's the one.
Or Burberry, something like that.
Burberry isn't.
Barbour, I think. Barbour. Okay.
Trench coats.
Quintessentially British.
Barbour ABI, business to business service. Yeah, that's the one. Barbour.
So there are these directories in different markets, and they are traditionally they were magazines that then kind of transformed into online, and then there is a little bit of search, but I can't take it over into my internal systems with a click. I can't auto-generate outreach emails. So all of that is something that Building Radar allows me to do. In that sense, there's, I think, 1 or 2 companies in the US that do try to do something similar, but from a product perspective might be years behind Building Radar.
Mm-hmm. Interesting. So what is in Building Radar that differentiates from these localized competitors that would perhaps allow them to go across the border?
It's the workflow, right? I mean, the finding the lead, that's, when you feed that into the top of the funnel, that's already quite valuable. But you could argue, hey, my local directories would help me find leads as well. Building Radar will tell you, hey, I can find them earlier, and I can find more of them. But, take that for what it's worth. But then from there, it's the workflow, right? So this gets fed into my entire Building Radar software, and I can then automatically, for example, with AI, that's LLM embedded, draft the outreach email. And the outreach email will be custom to, for example, my sales brochures, my documents. So it will read my documents and use those embeddings in order to craft a custom outreach email to this specific project, because Building Radar also knows who is the contact person of that project. What is the email? So they enrich all that data, which is something that from any given directory, maybe you can get it once in a while, but certainly not for everything. And it doesn't get translated into a workflow down the line. When the project person then replies, Building Radar will see that, and they can continue with the conversation on your behalf if you so wish. So you can automate a lot of this outbound sales motion until the lead is sufficiently qualified and you want to grab the phone.
Can I ramble on something a little bit?
Ramble away.
I'm part of, I bought a subscription of one of the, like a lead generation software, and I think I'm paying around 400 quid a month. And I recently asked them if they can introduce also energy centers, or how do you call them?
Data centers.
Data centers, right? And they said, okay, that would be additional £150 per month for that. I never can understand why does it cost so much to just allow me to get a few more data.
It doesn't cost. It's not cost pricing. It's just value pricing.
Yeah. That's it. Yeah. What do you think, Owen, about the value pricing versus cost pricing?
I just want to make a point on my earlier. I'm going to dodge the question because, but to add to my earlier point about these things moving in trends, like the material choice. I even know that the designers get like cease and desist letters because the designs end up being like so similar to one another. So there we go. Shall we move on?
Sure, it's a very good company.
Yeah, I really
to
like
follow it.
I was very impressed with. It's one of those ones where it's so clever that when people tell you, like, oh, it's so simple.
It's obvious.
Yeah, but like a lot of these successful companies. So, Patrick, we'll spotlight you for this one. Fundamentals AEC Tech quarterly data collection.
Yeah, so this. You're showing the raw spreadsheet now. We're generating the slides as we speak. So every quarter we're updating the world on how much funding and how the funding has actually developed for AEC Tech and Construtech specifically.
Right.
And so what you see here as a start is just the cumulative funding curve of ConstruTech. Never mind the two colors. I'll explain it next week in the slides, but there's basically a core construction tech category, and then there's an extended AEC Tech category. And these numbers exclude big outliers from the past. They exclude Katerra, they exclude Helio, they exclude Vue, and there's a fourth one that we exclude that was also basically just completely distorting some of the years. And you see that now we stand at 35 billion of total cumulative VC funding raised for our category, which is about 3 times of where we were in 2019.
What's the difference between construction raised funding and AEC raised funding?
So construction tech we define as like core construction tech, right? So that is something that would be, for example, used to be PlanGrid, so a field management tool specific for construction tech companies. AEC Tech would include the design stack, for example, for AE firms. So that is the darker bar here.
Is it hardware and software kind of division?
Well, both of them can be included, yeah. But so let's say Snapshot would be at the top and PlanGrid would be at the bottom here in the chart.
Mm-hmm. Okay. So 3.5 billion 2024.
So what's the difference between 2023 and 2024, Patrick?
So it's just cumulative, right? So by the end of 2023, we stood at 32.6. And right now, October 2024, we stand at 35 total.
So that is...
But you can scroll further. So we also show the quarterly funding here.
So, okay, got it.
There you go. So here you see, for example, the last 4 rolling quarters. So this one is not cut by the calendar year. This is basically cut by, hey, Q3, Q2, Q1, and Q4 last year, which was 2.7 billion in net new funding that went into our categories. And as you can see, it's been slowing down a bit over the last 4 rolling quarters, but we're still substantially higher than we were before 2021.
Is it why is it slowing down? Is it VCs trying to time the market?
No, first of all, overall, the venture funding has been slowing down a lot over the last year and a half. And so that is no difference in general of ConstruTech, right? But as you can see here, Owen already scrolled. Actually, what's extremely encouraging is that the market share of ConstruTech as overall venture funding is constantly increasing. So now we stand at, in the latest quarter, Q3, we stood at 0.8% of market share of total VC funding. And that is something that, historically prior to 2021, we were more in and around 0.2, 0.3%. So we're almost 3x higher in terms of market share. And so while overall venture funding has been declining over the time, our share of venture funding has been increasing.
It's interesting.
Patrick,
what do you think?
Sorry, Martin, go on.
What do you think is the plateau point at which it will start being kind of constant? If you can have you ever thought about it at all?
My guess is that it will be between 1 to 2%.
Mm-hmm. Patrick, have you noticed that since increased funding, quality of company has also increased?
Absolutely. I mean, it's something that the Q3 updates and the funding updates don't really reflect, but the quality of founders, which is the most important measure in the early stages, has increased constantly since we've been doing Fundamental every year. And the quality of projects, how they fit to what the industry needs, the level of insight that founders provide us. I lovingly call the founders that I love the most the onion founders, right? So you peel away and it reveals deeper and deeper insight. That the onion founders are just increasing constantly.
Where do you know what the reason is as to why they are coming into construction? I mean, it's a quite broad question, and I think we do discuss it on Bricks and Bytes sometimes. But the reason as to why, is it just because of the funding, or are people like really genuinely passionate about solving some issues that exist?
This is a flywheel. The more funding goes into the sector, the more attention the sector creates, the more and better founders get attracted to it because, quite honestly, they just get aware, but they also attach a certain curation to the funding numbers, as in, hey, there must be quality here, so perhaps it's worth looking into. The more and better founders are now in the space, the more adoption happens by the incumbents, by the customers, by the suppliers, all the market participants. And the more the adoption happens, the more funding gets allocated into the sector. So that is actually a flywheel, and that has been happening since we started fundamentally.
Okay. On this 1 to 2% as a kind of plateau percentage of the total funding, is that because majority of companies are business to business and there is no enough direct consumer that could increase this quote unquote hype on construction technology?
To be honest with you, there's no scientific method that I applied here. I think it's also
because it's a category, right? So 2% for a category, is it a lot, or is it small, or is it average?
Yeah, I mean, on average, that would mean we have 50 categories to fund with VC money that are similar to construction tech. That does seem a little bit high. That, you know, construction tech in terms of just underfunding is insanely underfunded, but the market share also is very volatile. So to give you an idea, right? So if I include Catera rounds, which I didn't, and I always exclude it, but if I did include it, then we would have had quarters where construction tech had, you know, maybe 3% of global VC funding. So it will be quite volatile quarter by quarter, depending on certain mega rounds, right? But the plateauing of just the, let's say, average over certain quarters, I would just non-scientifically looking at the trend, and I would think, hey, you know, 2% is perhaps the equilibrium that we can expect, but venture funding in total will increase substantially. So if the total funding increases and we increase our market share, we will have an exceptional disproportional funding effect in construction tech over the next years.
Just looking at some of the largest deals of the last quarter, and it made me think, is there an area that more money is going into within construction tech, like whether that be sales enablement software or
Not really.
robotics, or no?
Not really. I mean, traditionally over the last 2 years, the materials and green materials, sustainable materials space has been getting probably disproportionate more funding. So here in this quarter, we had also Forterra with another 85 million, which is not a new company by any stretch. It's a company that has been around for a long time. Monarch is not a green material, but in my opinion, a very interesting business, which basically helps with retrofitting commercial and retail buildings to help with their cooling needs, and not just HVAC, but actually like commercial cooling, think fridges, for example, right? Very interesting business. So no, I wouldn't say there's like one trend or subsector that is driving it or that is making up the majority here. So the companies that you see here in terms of the 10 largest deals are quite diverse across the spectrum. But companies like Forterra historically are the ones that have attracted more of the capital. Whether that is right or not, I will leave to everyone's judgment.
Is there, based on the latest, Patrick, is there something that, is there an area that you guys are looking at currently where you feel that there's a future bigger opportunity?
So look, we invested very, very early, right? So earlier than almost everyone else in the industry. We lead pre-seed rounds, we lead seed rounds, which is like year 1, 2 or you know, day 0 of a business. In terms of the from there, we have to make the abstraction of, okay, what could be a long-term winning play? And that is not so much derived by, at least in our mind, predictions of what will the sector look like in 10 years, because you will extremely likely be wrong about that. So we're not approaching it that way. Quite honestly, we're just looking at the substance of the business, which includes the quality of the founder, but also does it fit the first principles of the business? On-site robotics is such a space that we spend a lot of time in, because that we think that fits the first principles of what construction needs a lot, as an example.
What is that you are avoiding right now?
Green materials, sustainable materials. The PC friendly version of my explanation for that is we lack the scientific competence.
Martin also whispered AI.
So I'm not avoiding AI because I'm avoiding AI, but I am avoiding AI for other reasons in many places, just because I don't think the businesses that tout AI in their pitch decks in construction are particularly well thought through, many of them.
How about pre-revenue startups?
I do that all the time.
All of them are pre-revenue.
My sweet spot.
Lovely. Very nice. Patrick, is there anything else worth going into in here?
So the concentration ratio is very interesting.
Where was that,
at
sorry?
the bottom.
Here?
At the bottom here.
Yeah.
So what you can see is that the top 4 deals last quarter made about 16% of the Q3 funding, and the top 10 deals 22%. That is a super, super healthy ratio. So typically a concentration ratio CR10, so the top 10 deals in a market that is nascent or a category that is nascent, you will typically have something like 30, 40, or even 50% of the top 10 deals. And that is an indicator of 30% is still fine, but 40, 50, or even 60% is an indicator of just 1 or 2 mega rounds defining the funding in that category. And that means that the category in itself is not very mature. It's dependent on 1 or 2 companies. So, for example, when Procore raised their biggest rounds or Katerra raised their biggest rounds, that will have been the concentration ratio back then, because there was just no optionality, no choice, no diversification in the constructech category. We are not at that anymore. So 16% CR4, 22% CR10. That is extremely healthy and is a very strong indicator that we have great range of choice of good companies to look at.
Curious to see how this concentration would look like in the AI space, where OpenAI was valued at 150 billion. Or I don't know what was there.
It would be much higher.
It would probably not look too different, quite honestly. But that, so it's not an indicator of quality. It's so the concentration ratios is just an indicator of how much choice capital allocators have in the category. And in AI, they have a lot of choice.
Yeah, sure, actually.
Very good.
Anything else to discuss on this spreadsheet?
I mean, follow Fundamental and you can get all these stats open source every quarter.
Brilliant.
Fundamental.com.
Okay. Jacob Bro. That's an amazing second name. So Jacob has said, let's scan through this quickly. So there's a startup, I believe is this in Germany? Lilium? Yeah, that is, he's basically comparing them to WeWork. So what he says is they're looking for a bailout at the minute, and apparently the company will never work. And as far as I understand, they try and build airplanes? Air taxis?
Yep.
And it sounds to me like they've run out of cash, and people are calling on them to be bailed out by the government to keep burning cash and create something that will never work.
Yep. Sounds about right. Company lost 90 million last year.
That's not too bad.
Lost. As in burned, right?
Yeah.
And what was I don't know how much you know about this, but what was the premise for this money? Like, did they deliver, or I guess no?
I'm not familiar with the insights directly into Lilium. So what Jacob says here is that, hey, if you know, the company is up against physics and it will never fly. I'll have to take his word for it. It certainly makes it sound like he has certain insights here that make him say that. But I couldn't comment. I couldn't say yes or no. But when you look at the numbers that have been published, I mean, they lost 90 million last year and then 400 million the year before. And the company has been around for 10 years.
Wow.
So if you accumulate, it's probably something, substantially bad in the business. And you need to keep selling the promise. Oh, but next year we will fly. Next year we will fly. But the year after, then we will fly. And of course, then we will make money. It's just becoming substantially harder every year to believe those promises.
You can start extrapolating and thinking about, okay, so 400 million in the past, 100 million last year. Now we'll get a bailout. Okay, so what will be next year?
I mean, sorry, just to correct you there. It's not said that they are getting a bailout. They are asking for a bailout.
Yes, but I'm just assuming if they have it, then what is going to change? And obviously that's unknown. No one can answer that because I guess the product is in development. But like what's the next source of capital after this bailout, if they have it available? Yeah.
Yeah.
No idea.
So why are people so strongly calling for them to be bailed out? What do people not
Could be
see?
perhaps because they're holding shares. And,
Yeah.
because if you look at the people who actually ask for it, it's a lot of venture capitalists and a lot of angels.
What do you think they'll get bailed out?
I'm not close enough to this case, but I do think that this is what's the right term? Ironic, perhaps, if not cynical, to call yourself an angel investor and call yourself a venture capital investor with the term venture, and you like the upside that the risk brings with it, but you try to outsource the downside of the term venture and angel investing when shit hits the fan. I find that sarcastic, ironic, if not cynical. And it does remind me to a degree of, bank bailouts in the subprime crisis, 2008. We gambled, we wanted all the upside, but then let's democratize and socialize the losses. Once that happens, I have to say, I have no respect for people asking something like that.
Yeah, I think you put it into the right box, because if you gamble, because in the end of the day, you can look at venture investing to a degree as a gamble, especially when such a concentrated amount of money has gone into one thing, then they must have been aware of the potential outcome.
Honestly, I will go on the record and say I would be ashamed to be part of this, to have given my signature to this request for a German warranty. I mean, we call it bailout. It's I think you can debate whether it's a bailout or not, but they're definitely asking for a German bank guarantee, so to bank guarantee from the German state. I would be embarrassed to put my signature under this request if this was my profession.
Yeah.
For the employees, that's different. The employees didn't invest their own money. They invested their lifetime. And of course, every employee has a higher threshold and deserves a higher threshold of protection than a capital investor, especially those that make portfolio type investments, right? So that's why I build portfolios.
Yes, I think there's a difference between like bailing out a company which has a product and it sells and it has some periodic struggles, whatever that is, versus a startup which doesn't have a product and as Jacob said, is against physics. Okay, so taking into account the employee sentiment, I would agree that it makes sense to help a company if it makes sense. But in this case, there's they haven't done anything, right? That would be something that they could sell and get back to the and start selling.
Maybe they have, maybe they haven't. I cannot comment on that. I'm not familiar with Lilium's business at all. But what I will say is, the company received almost 400 million in funding since 2016. And that was unfortunately an era until late 2022, where the reason for investments in many firms was not the product of the company and how it was adopted by customers, but the reason for investing was a derivative of that. That is, hey, let's not predict how much product gets bought. Let's predict how much shares get bought next time. And that was then the reason for investing. And I'm not saying that was the case in Lilium, but I'm saying that was the case a lot in that time frame for a lot of companies. How can you raise 400 million without customers buying the product? Well, SpaceX had a long time to, making the first NASA contract and flying the first rocket. Eventually they did. You could also make the case that, hey, companies like SpaceX and Tesla did receive certain support in different forms from the state along the way, you can make that case. Whether that is right or wrong should be up to your own judgment.
I think you need to assess the opportunity cost associated with these things as well, because if a load of money goes back into something that potentially is never going to fly, then that's money that could be potentially going into something that will fly. So from a government perspective, I'm sure that they'll be looking at. You hope that they will be looking or thinking along a similar line.
That's what governments do. They go into details with a lot of competence.
Mm-hmm. The company has accumulated losses of 1.4 billion since inception. That's a lot.
Sounds like some companies take venture capital money and just having a holiday.
Oh, yeah. On these, on the point of angels or VCs asking for a bailout, what would they get out of this? Because I guess they wouldn't be able to sell their shares in any way, even if had the bailout happened.
Yeah, not as part of that. But still keep in mind, a company that is not written down to zero in your books is still better than the same company written down to zero.
PR. Yeah, it's interesting.
Cool. Okay, guys.
So I'm completely on Jacob's side here. I think Jacob completely nailed it. And I'm on the record saying I find it an embarrassment to put a signature under this. Just solve your problems internally if you call yourself a venture capital investor or an angel investor.
Mm-hmm.
Very good. Shall we wrap up with that?
Yeah.
Okay, guys. Thank you. And we will see you next week.
Thank you, guys.